is now talking about leaving the region before ensuring that the Strait of Hormuz is flowing normally, and that really doesn't do much for energy markets globally. We really normal for crude oil prices to begin to return to more sustainable levels. Crude oil prices right now are at levels that are very inflationary, and the knock-on impacts on product prices are what is really what's driving consumers to reduce reduce their spending on discretionary items, and it has a huge impact. It's recessionary, and if this ends in 2 to 3 weeks, that is very good news for the world, particularly for Asia that's facing a mounting energy crisis. I think it's highly unlikely this ends in 2 to 3 weeks.
5%. So the same amount of gasoline prices, of course, much lower in February than they were than they are now in March. Basically, it's what the data really couldn't make much sense sometimes, but that's the data. Well, given that people are spending, it says
sense. If we even tonight get a real roadmap for an off-ramp and real evidence of talks and an idea of how this is going to be resolved, then I guess we will see more short covering because then probably today and yesterday was only the beginning.
JP, appreciate it. That's Bloomberg's Jan Patrick Barnett. Now, elsewhere in stocks, check out what some of the retail sector is doing. Nike getting punished, down 12%. RH also down 23%. Both of them warning of tough times ahead as both earnings outlooks disappointed due to changing consumer habits, around policies like tariffs. However, U.S. retail sales did increase in February by more than forecast, including a rebound in auto purchases. ADP data also came in hot. Michael McKee, Bloomberg's international economics and policy correspondent, joins us now. And maybe Nike and RH have its own thing going on, but it does sort of stand out the contrast between companies' views going forward and I guess maybe now stale data in February for the retail sector.
Retail sales were February data before the war, and certainly retail sales are denominated in dollars, so it's going to be affected by the rise in gasoline prices. The maybe good news is ADP. Now, I don't know when you say coming in hot, I don't know what hot means anymore because they said they found 62,000 private sector jobs, which is a little better than was forecast for them, but lower than the survey we have for Friday's private sector jobs of 75,000. You can see on the chart that the ADP has not matched up well in the last couple of months with what we get from the government. Last month, they said 66,000 jobs, and the government found in terms of private sector jobs a negative 86. So we'll see what happens on Friday. But back to retail sales. We're looking at what I call antebellum sales before the war. And retail headline did come in fairly strong, up 0.6%. And you take out gasoline prices, it was still up 0.6%. But remember, prices are a lot higher now. The core is what we care about. That goes into GDP, and it was up by 0.5. So a little bit extra strength for the first quarter. The biggest movers, health and personal care stores, clothing stores, both up over 2%, and motor vehicles were up 1.2%. The interesting thing, grocery stores were down a percentage point. I don't know if we were, going to get our nails done and did not eat or something like that during the month. It is what it is. And again, this isn't going to tell us much about what's going on, although it's interesting that clothing stores and clothing accessories were up as much as they were when you took something like RH and Nike being down.
What do we get? At 10 o'clock, we get ISM manufacturing, right? And manufacturing has been, it had been a goal of the Trump administration to boost the manufacturing sector in the U.S. Of course, that goal may change at a moment's notice. But what are we expecting to see today?
We're expecting a slight rise, and it would be the third month in a row where we have expansion rather than contraction for ISM. But we're going to be looking at the underlying indicators. Obviously, employment, maybe 7,000 jobs lost in manufacturing during the month. But the real interesting number is going to be prices paid, because it's a sentiment number, doesn't depend on the actual price of petroleum. It depends on what the purchasing managers think the price is going to be and how it's going to affect them. And there are some people thinking we could see almost a record number on that.
So I figured coming in just under 50 minutes time. Mike, thank you very much. Bloomberg's Mike McKee. And let's get a check on your markets this morning. 20 minutes to go until the start of cash trading. We are still up today. We are holding a gain, which was the best end to a quarter since 2008 after a very rough quarter. It was the best day in general since last May when we had the U.S. and China reach a sort of detente over Liberation Day tariffs. You're seeing yields, those moving higher this morning. We're at 4.33 on your 10-year yield. The Bloomberg dollar spot that falls 0.3% this morning. I don't know if we have oil in there. Oil,
It's a separate board, actually.
Oh, yes.
Well, I put together two boards today.
Please take it away.
Well, I thought it was important to look at two boards here because we have so many assets that are moving. The volatility has just increased with this war, and perhaps that's also part of the goal. But NYMEX crude right now is down to 80 cents. It's still at 100. This is WTI, even though we're energy independent. We're still seeing NYMEX, West Texas Intermediate, rise with Brent and terribly close to Brent as well. It's only $1.25 away there. So Brent crude at 102.26 right now. down 1 2/3%. Gold actually moving a little bit higher to 47.30, so getting back closer to that 5,000 level that it had been. And Bitcoin holding pretty steady at 68,377. It's been about 70 grand throughout the war. Let's take a look at some of the single stock stories.
Jack, Raymond James, they've upgraded Disney to outperform some market perform. They say that this is an attractive entry point for the stock, which shares are moving higher by 1% in the market.
Anglo Gold among the miners rising as investors anticipate de-escalation. And it's funny how this works out, right? We invade Iran and gold falls and it looks like we're getting ready to pull out, although we are sending another aircraft.
Right. And gold did about 3.5% yesterday. This is pretty wild. Microsoft is in exclusive talks with Chevron and investment fund engine number one over a long-term deal for a giant power plant in West Texas. Chevron down, Microsoft down.
Coming up, OpenAI is inching towards a $1 trillion valuation after a massive funding round. It got more than $100 billion in fresh cash. This is Bloomberg Open Interest. of stocks to buy.
I suspect what happens, like if you look at the Mag 7, actually, they actually peaked at the end of October. So that underperformance has been going on for a number of months. I think as the conflict hopefully comes to a resolution in the not too distant future, initially it's those Mag 7 names that are going to bounce back. Those are where the valuations have come down, earnings estimates have really held in there. So that's kind of an easy place to go for some grounding. But as we kind of get past that, then I think in the back half of the year, you start to see smaller, large caps, mid caps, small caps start to kind of come into their own when it comes to earnings. And that's the longer term trend that we see going forward.
How are you thinking about the impact if the conflict ends, but the strait remains closed and oil prices remain elevated? What sort of impact would that have on your look
I
forward?
think that's our base case right now. We don't go back to $60 oil. But if we get back to, let's say, $80 oil, where the cost of doing business, the cost of transportation for oil is still high, that's still a very sustainable level. And that's also a level at which most American producers can be very profitable, right? So that becomes the ballast to all of this.
The broadening out that we were seeing, do you bet on that? Because earnings expectations are still pretty high for the whole S&P 500, right?
Yeah.
Double digits.
Yeah, and that compares with like a 9% long-term average. Like that's fantastic. And so even if we see a little bit taken off of there, right? If expectations come down a little bit, we've also had valuations re-rate down. And so that becomes a really big opportunity where you have solid earnings power, a little bit more attractive valuations.
Does the earnings power, though, stay if a consumer is still dealing with $4 at the pump? Like, is there a level at which the really strong consumer retail spending we got, I mean, February numbers were very strong, even though they were very backwards looking. Is there a level at which people start to funnel more of their savings into things like the cost of powering their car? They start to save more. They get nervous. Is there a threshold?
I think there is for sure a risk, but it's actually duration is more important than level. So the longer we stay at these high levels, the more damage happens. But the uncomfortable thing to remember is that higher oil prices really impact the lower end consumer, who's actually a much smaller contributor overall to the US economy. High end consumers are actually in really, really good shape. Wealth is at historic levels. Leverage is at historic lows, and the amount of earnings that they spend on filling their gas tank is relatively small. So again, as we think about the US economy in aggregate, it's very asymmetric. Who gets hurt by high oil prices?
You know, last year, the other markets around the world in Europe and Asia outperformed the US. Now, they needed to do some catch up after, a decade of underperforming. But is that trend finished now?
I don't think so. It has certainly been halted. If you look at emerging markets in particular, they've really been hit hard by these high oil prices. So you have to get that corrected in order to see some momentum come back in those names. But again, as we think about fundamentals, we think it makes sense to have exposure outside of the US, both because we're likely to see a continued pressure on the dollar. You have extraordinarily low valuations in those markets, and you're starting to see earnings begin to pick up.
What difference does it make the dollar going forward from here? Because we're seeing the dollar decline now as we look towards a resolution of the end of the war. It had been strengthening as the war came coming up. How are you factoring that into your view forward?
Yeah, and then meanwhile in 2025 the dollar was quite weak, and so what we tend to see is that the U.S. dollar goes through these large cycles, and in periods when the U.S. dollar is appreciating, U.S. markets also tend to do better on a local currency basis. But we think that we're starting to come off of a very long period where U.S. dollar has been strong, U.S. assets have been ascendant, and it's starting to favor some of those assets outside the U.S. It doesn't mean the dollar is going to plummet, but on the margin, we think that outside the U.S., we tend to have the benefit.
Right. Kara, we're going to have to end it there. Thank you so much for joining us this morning. Great to see you. Kestra Chief Investment Officer, Kara Murphy. And we are 8 minutes just over that into your trading day right now. We're not only holding on to gains, we are increasing them. We're now up 0.8% on the highs of the morning. The feature session included after a very, very strong day. We had the most advancers yesterday so far year to date. It's pretty good breath this morning, 325 stocks up. It's all of the big mega cap tech, as Kara was just talking about, that's advancing. They are now all trading below 25 times forward earnings. So maybe it's a nice little bargain if you want it. NVIDIA, Alphabet, Amazon, Broadcom, Meta are the best gainers. Micron, which had been selling off, up 5% this morning. Intel, we talked about their deal with Apollo. Those shares are also up by more than 6%. On the downside, you have consumer type companies, and you have energy names, energy falling with the price of oil. Nike down 13% after a lackluster earnings report, where China did not perform as expected. McDonald's is in there, Visa, MasterCard, against some really consumer exposed names like P&G. You're going to see that if you look at the sectors this morning too, that energy is performing poorly alongside consumer staples. Energy down 2.1% is the best performing sector over the past months. Over the month of March, no surprise, with that big move in oil prices, one of the biggest months since the Gulf War. Communication services with the tech, industrials, infotech. Those are your leaders this morning, Matt.
All right, coming up, Brian Reuter of Permira is going to join us to discuss his outlook for M&A. And by the way, today is the big day. Today is the hour-long M&A special starting at noon. Danny anchors that, and we have a lot to talk about with Brian. Looking forward to him joining us on this Bloomberg Open Interest.
So, Wednesday morning, jam-packed with some news here. Let's see what we had this morning. Retail sales up 8:30. Was up over 0.5% there. The next one, we got PMI 10 o'clock. So in about 20 more minutes. This is the
What's great about it is it's a
manufacturing
system, right?
cost or inflation on that prices.
So it's developed. This gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the
Broke even on this short.
gaming.
Trying to go long here. We stayed above the VWAP.
Gaming experience.
Pivot off the VWAP, and then
we are now
these sellers here got trapped, absorbed by aggressive buyers coming in.
And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. Basically are gonna unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Matei. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. Record is really propelling the field forward.
Yeah, the hope is that they'll open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Guys, buckle up. Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemima Bersetchi in Davos, Switzerland, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg. Quick check on what's going on in the early trade. We're up 0.5% on the S&P 500 after a massive rally yesterday. 65.61 is where we sit on the benchmark index. The NASDAQ up another 152 points to 23,895, to getting back close to 24,000. You got the small caps rising more than 1%. It's time now for top calls. Some of the analyst action and focus this morning. First up is Raymond James, upgrading Walt Disney, saying the current slowdown and weaker international park traffic make this a good time to buy, with streaming profits expected to drive more growth over the next few years. Next up is Benchmark,
Take the 1%.
saying the company is becoming a leading force in AI and says investors should take advantage of the recent pullback by
Broke even and I get some profits. But
5%. Today, of course, they rallied with the rest of the market. And finally, HSBC is upgrading Bank America and Wells Fargo to buys, writing that some bank stocks have
sellers coming in, strong sellers coming in on NASDAQ here.
A strong start to the year, despite a volatile as the war in Iran continues to cloud the global economic outlook. We spoke with Rich Lawson, who co-founded private equity firm,
Sure, it looks like that.
about what he's seeing in the market.
Problem with absorption is it doesn't necessarily mean a reversal.
Right, but again, there are certain pockets of the alternatives, and particularly medium-sized companies globally, there are being transacted. We've actually bought a business in Canada. We've taken a business private in the UK, and we've also done a fund.
It's really been trying. They keep pushing you on NASDAQ and rejected.
Brian, thanks so much for stopping by.
Thanks for having me.
And look, this was a better view than anyone here.
It's on holding this gold trade is
But you operate truly globally. It's all these existential risks. I mean, you and I were just talking
strong sellers here.
Or what has
This level, like they're trying to protect this level.
Energizing, but incredibly volatile. Volatility tends to create like really interesting environments to invest in. Looking back over the last couple of years, it was actually tricky because we saw the markets being pretty highly valued relative to underlying risk potential. So volatility you can see in the world, but not volatility you could see in asset pricing. Today it's kind of reversed, and you see risk being priced everywhere, especially around the AI trade. So it's a really interesting time now. So we were saying before it was a good time to be selling beta.
VIX is up in an extreme fear zone here.
Excited to invest in, but you have to pick really interesting selective assets where you can drive, differential returns over several years. Now we actually see much more interesting opportunities with the way the market's being priced.
the AI, I guess, evolution has created kind of a reckoning for software, especially. And it turns out that private asset owners are
Not sure if this PMI news at 10 is going to be priced in or not.
How does it look at Premier?
Usually it is.
Yeah, we have a significant part.
It's 8:30 was.
That's in B2B software, especially minority of where we've been investing. We actually have been a significant net seller of software for the last several
There
years.
was
Not because we think software is
heavy for the day.
this risk price into software. So we saw better opportunities to sell software than to
Hopefully for the week.
recently, really towards the end.
Let's see what else we got going on the rest of this.
A really interesting price range. And we think actually now it's been oversold, not necessarily in total, but there's really interesting.
No. Payrolls on Friday. That's going to be payrolls and the unemployment rate on Friday. That's
Good compared to workday at 9 times.
going to be a crazy day. This is the news. Friday will be news of impact of the week.
Have not yet reset to reflect those levels. It usually takes 6 or 9 months, as crazy as that is, for the private market to kind of see their way to what the public market reality is. But anyway, we think there's some really interesting names out there, and it will kind of work its way into the
Yeah, I was just thinking that your company's Zendesk must be so happy that they're not a publicly traded company when all the wildness was happening.
Yeah.
So when you look in the market, if private hasn't caught up, are you actively having conversations with publicly traded companies that you're looking to take private then?
The take private market has been a very consistent source of deal flow for us. It's a really good one. I don't know any public company that's happy to public at the moment. And so we've taken companies public, we've taken more companies private.
Looking for a shorting opportunity on NASDAQ here. Sellers have aggressively
Last year,
acted.
it's a great trade for Salesforce, but we're very happy that that company's not
Um,
right now.
24
Times having dialogues with all of these companies about
200 level.
It's kind of a world.
What's your take on the mode that's necessary, or what do you want to see in a software company?
Oh, trying to go back up.
So fascinating that the CEO pointed out Anthropic and OpenAI still Workday.
Maybe I should have held that.
We think there's a lot of
Would've
kind of comfort terms.
taken me out of break even anyway. So
Comfort term. Every application has a database, and you'll see people say like, well, we're a system of record because we have a database. I'm like, that doesn't really fit. You need to be feeding lots of other enterprise applications in the organization to have that kind of level of stickiness. So there's a lot of like the modes have changed. And a lot of moats that we find really underwritable today are back to basics. It's regulatory protection. It's deep relative market share advantages relative to your competitors. And actually, a lot of what we've been doing with our existing portfolio companies, going back to 2022, 23, the release of ChatGPT was a growth investment around AI innovation. And now 600 million 2 years ago, that's growing more than 100% per year. So your best protection is actually to invest in and around your technology.
More than 100% per year. That's more than doubling every year.
Yes.
Wow.
And by the way, like you realize there's tremendous advantages in the AI era to being the incumbent because you have access to all of the context and workflows. It's actually the rate limiting step for us to get real value out of all their investment. So we're thrilled. Zendesk being one of them, 200 million plus 600 million is what Zendesk alone. We made that pivot very successfully over the past several years, and really embracing.
Some of the peers and maybe software companies that don't have that incumbent advantage, it's been sort of stacked on top of what people are saying is the bifurcation of private capital players right now, the haves and the have-nots. We've seen Kepler has some status that are hedge funds saying that roughly a quarter of PE funds that have raised since 2015 have failed to earn the rate of return at which firms can earn performance fees. There's a lot of talk about the 21 and 22 vintages being poor because of how much was paid. Again, that sort of shakeout, that bifurcation, have those troubles fully made their way through the system?
It never fully works its way entirely through the system, but there's been a very consistent trend of where, especially institutional investors, like capital management tends to be different as this school. So that's a very consistent trend. There is a cycle to the industry. Some of that's driven by some vintage. You're talking about a very tricky vintage year, kind of 21, 22 era of the industry. But the industry always survives and thrives.
Is that making its way out, that vintage right now, or exits finally coming? Because I know there was some kind of indigestion of could the sellers and the buyers, could that gap come together? Is it coming together at all?
Yeah, it's still a low liquidity vintage across the class. We have been monetizing in our vintage for that. Like that underlying portfolio is actually growing really nicely. So the more you grow, you work out some of the prices that were paid during zero interest rate environment and the like. So what we think actually the assets you want going forward, we love our position in there because we're a digitally native investor across everything we do. Our second biggest, so our deep kind of roots in the valley, but applying that technology expertise to all of the areas we invest, whether it's services, healthcare, consumer. We think that's actually the setup you want as a firm heading into the next decade of risk and opportunity around AI.
Brian, happy here. And as Danny points out, your perspective is really valuable. So I hope we can get you back on again. Brian Reuter there talking to us, he of Permira, but fortunately here at 731 Lex. We're getting some breaking news from the Islamic Republic of Iran Broadcasting Network, IRIB, citing the IRGC, saying that the Strait of Hormuz won't reopen based on Trump's absurd displays. And that's their word, not mine. As a result, you can see that we have paired some of the gains that we had on the S&P, although we're still up 0.5% at 37 points at 65.
Well, just got trapped again.
It is,
That's twice.
seen a couple of these big
At the open, and then
hour and a half ago, President Trump said he will only consider a ceasefire
Well-
with Iran when the Strait,
just took out these sellers.
making that an objective
Stronger right now.
defense.
I mean, look at gold.
That it was not an objective.
All these sellers. These are just strong sellers right here. Try to come down and just reject it. Look at the wick.
Markets more
Incredible.
over this.
I need to see conviction from the delta here. The VIX is still in extreme levels of fear, so I don't see how equities can go up right now. Sort of in a range bound right at the V lab. Even though gold is still above VWAP here.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
VWAP being respected here on NASDAQ.
Headlines crossed this time from Iran. We had President Trump earlier saying
Time sellers hit the VWAP here and reverses back up.
at the beginning of March, only when there's an unconditional surrender. But the Iranians say they're not going to open the Strait of Hormuz.
Sellers coming in on gold here.
I mean, 65, 64, 65, 66 right now. We're still up 0.6%. So the market really looking through those Iranian headlines. The NASDAQ gaining 0.75% to 1%.
The short is going to be at the POC level. We gotta get trying to find value.
This is
The biggest problem with these entries is
also down.
you don't get value, and you gotta sweat. You gotta sweat the drawdown, and
NVIDIA is up, and that's helping gains as well. Coming up the next hour, State Street's
what they say should size down in these volatile range markets. With combining the tariffs and the war in the Middle East here. Very volatile state we're in. Yeah, looking to short this gold here. NASDAQ respecting the VWAP. Bulls just stepped back in. Sellers multiple times at the open, at the quarter of the hour market here. Sellers stepped in, rejected, stepped in, rejected, and then here again.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook where power, billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call. There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's give us Scarlet Food. This taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. Investors, top executives, global innovators. Join me for in-depth conversations with the
It's newsmakers on the day's top stories. Insight with Haslin comment on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Is President Trump. He has arrived at the Supreme Court. And this is, his appearance goes against long-standing precedent. Presidents not attending oral arguments of their policies.
In fact, I recall Scott Bessent, the Treasury Secretary, criticizing Jay Powell for attending a Supreme Court argument concerning Lisa Cook of the Federal Reserve Board,
Right.
saying that he was politicizing the decision. It feels like this is very much a political decision too.
Again, the President Trump arrived at the Supreme Court as justice considered the constitutionality of his bid
APMI.
eligible for automatic citizenship when born in the U.S., which has been something we've had for a very long time
Absolutely.
in this country.
Higher manufacturing cost.
And then what I understand from the legal experts is as
It's just
well established.
another interpretation of an inflation there.
Too,
It is higher than the last quarter.
14th Amendment that all persons
Manufacturing index,
subject to the jurisdiction thereof are citizens. There's a key precedent.
2.7 versus
Kim Ark
is up since February.
to non-citizen parents from China was a U.S. citizen. And by the way, worth mentioning as well that this executive order that President Trump signed back in January 2025 has never gone into effect. It was blocked by lower courts. And reportedly, it would only affect babies born in the future. But, you know, once this gets reversed, who knows what could happen next?
Yep, absolutely. So there is no video allowed in the Supreme Court. There will be audio, and we'll take some of the oral argument audio live when it starts. And that's how we're going to cover, and that's how it's being covered here today. But there was certainly some video of President Trump leaving the White House en route to the Supreme Court, and then arriving at the Supreme Court. And we had Tyler Pender on live just moments ago, and you could barely hear it because there were so many protests on both sides of the issue happening at the Supreme Court, and very loud bands, drums and things like that.
Yeah, well, it's got a lot of people worked up, a lot of people animated. I mean, worth also reminding everyone that the opening arguments begin today. Let's bring in Jeff Mason, who is a Bloomberg White House and Washington correspondent, joining us from our Washington bureau. Jeff, when it comes to today's arguments, I mean, this is the beginning of a long process. We're not looking for any kind of decision anytime soon, are we?
No, you're certainly right to say that it's the beginning of a long process, at least in terms of being a long legal process. This process started when President Trump signed that executive order on his first day in office of his second term. And it really laid out
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. I'm Matt Miller in New York, filling in for Carolyn and Ed, who are on assignment today. Coming up, NVIDIA invests $2 billion in Marvell to collaborate on silicon photonics technology. We have the details of that deal. Plus, the debt binge fueling the AI boom continues, with CoreWeave raising $8.5 billion more from banks and investors.
Makers and market movers. This is The Pulse. Good morning. Welcome to The Pulse. I'm Anna Edwards, live in London. Brent crude has been oscillating around that $100 a barrel mark. It's down substantially this morning, down by 2.4%. In fact, we've seen the price of oil has been dropping. President Trump saying he expects the US will end its involvement in the Iran war within 2 to 3 weeks. We have not had any confirmation that the Strait of Hormuz will be opened as part of that, but we will be hearing from the president later. The White House says that the president will address the US nation, of course, tonight to provide an update on the situation in Iran. Let's talk to Bloomberg Horizons anchor Jumana Basechi, who's in the region for us, in Dubai for us. President Trump setting out a timeline there from the US perspective, and Iran seeming to signal that they're at least willing to perhaps talk. What do we make of the latest news flow and how that's playing out then, Jumana, in the region?
Yeah, well, certainly markets are reacting to these comments that came through from President Trump overnight, suggesting a 2 to 3 week time frame by which they expect to wind up their military operations. Now, we don't know how concrete this time frame is, and indeed, over the course of the war, which has been going on for more than a month now, we've heard several timelines. It's sort of shifted as the war has evolved. But I think today the takeaway is that there is optimism that the U.S. may be thinking of ending their military operations because, according to President Trump, they have achieved most of the objectives that they set out to achieve, including the main one, which is ensuring that Iran doesn't develop the capabilities of nuclear weapons.
U.S. January business inventories up 1%.
Of that enriched stockpiles. So again, there was no comment about that. It will be interesting to see whether it actually comes up in his address this evening. And the second point is he's sort of delinked the military objectives to the reopening of the straits. And this is sort of in line with the reporting that has come through in the last 24 hours, in which it seems as though the US now thinks that this is a broad global issue that needs to be resolved as opposed to a US specific issue. And there's some questions as to whether or not other countries around the world, including some of these Gulf nations alongside European nations, would actually be willing to form a coalition to help reopen that strait. So that's one question mark still outstanding for where we go from here. And then final point, Anna, is let's not forget there are more military assets still arriving into the region. We spoke about this on Friday, that first Marine Expeditionary Unit arrived to the region, and then Bloomberg reporting overnight that another aircraft carrier, the George H.W. Bush, has left California now, is on its way to the region as well. That will take another 2 to 3 weeks to arrive. So there's still a buildup of military assets. At the same time, the strikes and counter-strikes overnight have continued. And it's been a very, actually, intense 24-hour period for many of the Gulf states with incoming projectiles.
Yes, and with that in mind, Qatar saying that a missile hit an oil tanker as strikes, as you say, continue, Jumana. Take us into a little more detail around the role that we might see the UAE playing. We've seen the Wall Street Journal reporting that the UAE is preparing to help open the Strait
On this range.
necessary, which would be a big step.
This is the
first Gulf
this is the
country.
high of the previous 4-hour candle. We're just stuck here.
This is an outcome in which Iran still exerts sovereignty or control of the Strait of Hormuz is not an outcome that's acceptable to
This 4-hour candle
probably not to any nation.
is higher.
We need to go back to the status quo that existed before the war, which allowed for the safe and free passage of vessels through that Strait of Hormuz. So Wall Street Journal reporting overnight that
Asia will try to go higher. London went higher.
from Bahrain will be putting forward this
Much manipulation in New York session here.
Council to potentially get involved with reopening the Strait of Hormuz by force. And it's unclear exactly what that would
Nasdaq is creeping higher.
for the UAE.
Respected the VWAP, staying above. Both gold and Nasdaq are now both above VWAP.
opening the straits via naval escorts, via military operations, via using some of their bases as launch pads, perhaps to launch some of those operations, even going as far as taking over some of those little islands that are situated close to the Strait of Hormuz. But I think the takeaway from all of this is that there certainly is a lot of work being done behind the scenes on how you can bring together a group of nations, and perhaps not just the US alone, to come to some resolution for the Strait of Hormuz. If it's not diplomatic, then it will probably most likely have to be military.
Jumana, thank you very much. Bloomberg Horizons anchor Jumana Basetchi with the latest from the region. Let's think about what this means for the global economy. Janet Henry joins us, Global Chief Economist at HSBC. Janet, nice to have you with us this morning. So we were just hearing the latest from Jumana. Day after day, we get these updates about the violence that continues, the war continuing, but the markets react to the latest news lines and what they sense as any willingness to either leave the region, in the case of the US, or talk, in the case of the Iranians. Does any of this change your base case? What kind of base case are you still clinging to around these events?
Oh, very good question. As you say, financial markets are important. Any good news, if financial markets are more buoyant, then that's good for financial conditions. But as Jumana explained, there's just so much we do not know. We do not know whether it's going to take a diplomatic route, a military route. We still don't know about the direction or the timeline for any resolution of the conflict, and indeed the reopening of the Straits of Hormuz. So the fact is, our base case, what you might now describe as a good case for the global economy, is indeed that the Strait of Hormuz does open in the course of the next couple of weeks. But of course, every day that passes, the likelihood of our good case becoming a little bit worse tends to increase, because damage has already been done to the global economy.
Yes, absolutely. And so if we can think about that scarring to the global economy from the damage that has already taken place within the region, so attacks on energy infrastructure in particular that will take time to fix, supplies that will take time to reinstate. Even if we did see, let's take President Trump's latest time scale, if they left in 2 to 3 weeks, if there was some way for then the Strait of Hormuz to be reopened, that's a huge if. But if we can assume that's the time scale we're dealing with, what kind of damage will be done to the global economy if that's the case?
Well, at least for the next few weeks and probably beyond, we've got the uncertainty angle. Decisions are not taken. Investment decisions, hiring decisions are not taken. But the cost increase, which we have seen, obviously we all follow the spot oil price minute by minute to see where it's heading. But we also know physical supplies are an issue, and actually a lot of trading is happening at a much higher oil price. We obviously see what's happening with jet fuel, diesel, and all of these other derivatives. So certainly, based on our good case, we did already cut our numbers for global growth, because of course this conflict is having differing impacts on different regions and different countries of the world. We did trim our global growth numbers. We raised our inflation numbers globally by over 1 percentage point, and that was just based on oil prices peaking around 120, staying a bit elevated, but actually dropping back quite swiftly towards, by the end of the year, in the low 70s. So yes, you get this impact on inflation, but the indirect effects are a bit more limited. You don't get the second round effects into wage growth. Central banks don't have to respond with the aggressive tightening that might be anticipated, but there is still worse growth, higher inflation, and there is still some scarring effect, because obviously what's happening on gas supplies, we know the hit to Qatari output is going to last multiple years.
And talk to us about where you would see positivity for the global economy. I mean, not for the economy as a whole, but where are the geographies that are set to benefit from the higher oil price? So clearly oil exporting nations come to the fore, and maybe some of those you're having to your expectations.
Well, it's because I make very clear in the report, there are no outright winners from this. There are relative winners and there are relative losers. The relative winners are currently those oil exporters outside the Middle East. So actually Russia, Canada, and US net oil exporters, and top of the list will be Norway, because Norway, obviously a massive net oil and gas exporter, but also doesn't use that much oil. It's at the forefront of renewables, of electric vehicles and such like. But actually, even for those net exporters like the US, this is bad news for the consumer. The squeeze on real incomes, how that will weigh on consumer spending. And the uncertainty angle, if costs are going up for companies as well, they're not getting the same fiscal support there, that their costs will rise as well as all of those other cost increases that you've already been talking about this morning. But they are the relative winners. Latin America's a bit in the middle because obviously they've got a mixed exposure in terms of net exporters. And as I think there is this growing acceptance of, relatively speaking, it is Asia, China, but let's say Asia and Europe that are the relative losers in the net energy importation.
Okay, so that's the relative gains and losses. And what about the stagflation risk for the countries that are most exposed negatively to all of this? Janet, I get lots of messages from viewers talking about, well, isn't this just inflation? Is that where we're heading? Take us into your definition and when you're prepared to use that word.
No, that is a very good question, because actually the other point in Asia, they also rely on global growth because they've got the export channels to consider as well. So stagflation is something that Chair Powell was quite firm about at the press conference, didn't he? You know, he absolutely dismissed that term stagflation, which was very much coined in the 1970s when you had, you know, inflation that was well into the double digits, accelerating inflation, recessions, and rapid increasing unemployment. So yes, at the end of the day, you've got 5-6% inflation, or in the US, and you've got employment at 5 or 6%. Yeah, that's absolutely what we would associate with not quite 1970s. There are a lot of differences, but outright stagflation. And of course, there are a lot of other factors related to that. And we now have much more credible central banks who are much more willing to act at a much earlier stage.
Okay, interesting. It doesn't have to go to double digits to use that word. Janet, thank you very much. Thanks for joining us. Janet Henry, Global Chief Economist at HSBC. Coming up on the programme, the succession battle engulfing Banca Monte dei Paschi. Up next, we will be speaking exclusively to CEO candidate Luigi Levaglio. That conversation right here on Bloomberg TV. This is Bloomberg.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
The Wawa Water project was so urgent because there is obviously no life without water. The innovations that stand out at Wawa are really twofold. First, it's a very modern dam. And the second one is really our ability to tie together all the stakeholders towards a common goal.
It's not mere contractual obligations, but also bridging the gap to connect public purpose with the private sector. So we will leave this work with a secure future for generations to come.
Welcome back, everybody. This is The Pulse. Let's talk about Italian banking. A fierce succession battle has engulfed Italy's third largest bank, Monte Paschi, ahead of the expiration of the current CEO's contract. The board declined to back Luigi Levaglio's renewal, instead proposing external candidate Fabrizio Palermo, but the turmoil escalated further when Levaglio then decided to propose himself as a leadership candidate for Monte Paschi with the backing of one of the lender's shareholders, PLT, and Monte Paschi's board subsequently stripped him of his powers. A complex story, and Luigi Levaglio, I'm pleased to say, joins us now. Luigi, thank you very much for your time. Thanks for being with us. So the Paschi board last month refused to back you for a new term as CEO. Do you fully understand why they made that decision?
Let me say the following, that is, I think, the most important thing for our shareholders. I feel comfortable to be part of the charade of PLT because I think I have always delivered results for our shareholders. Market knows my track record. When I committed to a plan, I execute it, and I strongly believe that continuity, execution is crucial at this stage for unlocking the second stage of value creation for our shareholders.
Okay, so those are the reasons you think you should have the job, Luigi. Do you know why the board, though, decided not to extend your term?
I think is honestly is not the key point. The reason I think what is important that I feel fully committed to deliver the plan, and I am really glad to have the opportunity to join such a qualified list of Mr. Tortora, right? PLT.
Okay, and you have decided then to run for CEO anyway. Is there a chance? Do you still think there is a chance that you get a new term? Will you still be successful? Do you think?
I'm confident. I remain confident because I'm fully committed to the bank, to its people, and I believe my commitment will be recognized by the market as they just have in the last 4 years.
Some investors have expressed dissatisfaction with the plans you had for integrating Mediobanca. Do you think that is the reason that the board took the decision?
I think the plan was well assessed. We have several feedback from investors. The plan is okay. I think at that time there was several situations that impacted on the price of the shares, among which also the fact that we didn't publish the exchange ratio in exchanging the share on Mediobanca with Montepaschi. So the plan, I believe, is a good plan. We are delivering 60 billion of total remuneration for our shareholders. So I think is a plan that is positioning the bank at the very high level, considering that we are practically reaching the third place in the banking sector.
If the board, though, does have a problem with your plans around the integration of Mediobanca, Luigi, would you be prepared to change those plans at all?
No, the plan, I think, is well done, will not be changed. And I believe this is the key message that we can provide to our shareholders. The plan is there and is a very efficient plan, and I'm sure will provide a high level of remuneration for shareholders. At the same time, will position the bank for the next stage of consolidation of the banking sector.
Mediobanca has a large stake in the insurance company Generali, Luigi. As part of your plans, what would you plan to do with that?
I think, as I was mentioning last year, Generali is nice to have because it's bringing a correlated bulk of revenues, and it's quite important. It can be a further optionality for the bank insurance business. So we look at Generali as an important element of our business plan. But our strategy is much more oriented in corporate investment banking, private banking, and typical commercial banking.
So long term, would the plans be to not be involved with Generali?
I think, as I mentioned, it's important to have Generali, but our focus strategically is in making the group growing and delivering what we promised with the plan.
I think that I understand Italian prosecutors are investigating the activities around the Mediobanca deal. They're investigating you and some of the Montepaschi investors over the way that the Mediobanca deal happened. Luigi, can you tell us any more about that? What more can you tell us about the probe?
No, I think as investigation is ongoing, we are very confident that at the end everything will be clarified. The project is a project that for me was very important. I thought about Mediobanca since 2022, and finally I succeeded in implementing it with the support of all the people, all shareholders of Montepaschi and shareholders of Mediobanca. So to have 86% acceptance rate in delivering the share, I think is a recognition of the validity of the project and our capability to deliver results.
Does the fact that the probe is taking place, Luigi, does it make it harder for you to be CEO of the business?
No, I think the bank confirmed on the 5th of December my full fit and proper. Then there was another one in middle of February, and I believe, considering the stage of the investigation, this is not an issue for to be CEO of the group.
Do you think the probe is an issue for the board? Do they cite that as the reason why they don't want to extend your contract?
Honestly, I don't think so. But anyway,
yeah. We'll have to ask them. And the board has obviously stripped you of your CEO powers, Luigi. I wonder what you consider to be your current status. Do you still consider yourself to be CEO of this bank?
No, first, I am still a board member of Monte Paschi, even if I'm today speaking as from personal point of view, my personal point of view. And it's clear, I believe that is important that this project will see the completion. And I think I know the project quite well. I am extremely aware about what is necessary to be done, and that I would like to complete the project for the interest of all stakeholders.
Okay, Luigi, thank you very much for your time. We really appreciate it. Luigi Lavaglio, the CEO candidate for Banca Monte dei Paschi di Siena. And stay tuned tomorrow on this program. We'll be speaking to the CEO candidate put forward by the Monte Paschi board. That's Fabrizio Palermo, and we'll get his perspective on this conversation. Let's pivot to the earnings story out of the United States. We heard from Nike, pre-market shares. We'll put those up on your screen. And this comes after Nike gave a surprisingly gloomy outlook for the year ahead. Andrea Falstead joins us now, Bloomberg opinion columnist, of course, who writes about all things fashion and much beyond, Andrea. What seems to be the issue at Nike then? Pre-market, the stock down by 9%. The outlook was a little gloomy.
Indeed. And what seems to be the issue here is not the kind of products for sport. It's the kind of fashion, casual, athleisure products. They're down by double-digit sales, US, Europe, and Greater China. So that really has hurt the turnaround story.
And so that's the issue. This is around the fashion, more fashion side of the business rather than the performance side. Yes. And how is this
negative news coming out of Iran about an hour ago?
It's signs with
In terms of negotiations, that's maybe causing
he has started his performance. He set about putting sport above
this drop off here.
Nike strategies. He's concentrated on running where they are.
Yeah, weakness here in gold.
Unveiled lots of new products and innovations for that. Now he's got to really turn his attention to the sportswear lifestyle side.
Slight weakness in NASDAQ as well. The VIX is still in extreme fear zone, so
over to the mainstream. And they had that with the sort of chunky basketball sneakers. They've really gone out of fashion now, so they're trying to clear the decks of those. What they haven't really got is something to replace that. And we've seen the fashion cycle changing away from athleisure to sophisticated casual. And where we are wearing
he was short there on gold.
Dressier, the hybrid sneaker, like that's the
effects of Nike. Just briefly, Andrea.
I think they can do it, but the product cycles are long, and Adidas is stronger in those areas.
Okay, Andrea, thank you very much. Keeping an eye on our wardrobes and helping us understand the investment case.
It's like Nike slumps on the Iran war.
Very much indeed. Let's quickly check on US futures. So we take on board what we're seeing on the Nike share price, and that is of interest. But the overall story, of course, very much influenced by what markets are now expecting to see from Iran, the US willing to leave, the Iranians willing to talk. All of that adds up to risk appetite. And US futures are. Why McKinsey believes arenas and omni-scalers, we'll explain both of those, will direct future global growth. Details next. This is Bloomberg. Good morning. Welcome to the Pulse. I'm Anna Edwards in London. It's just gone 9:30 here in London, and here are your top stories. Stocks surge and Brent hovers around $100 a barrel on optimism the Middle East conflict may be nearing a conclusion. President Trump says the Iran war could end within 2 to 3 weeks, and the US would leave other nations to resolve the Strait of Hormuz. Plus, OpenAI's valuation tops $850 billion after one of the biggest transactions in history, boosting its expensive push for more chips, data centers, and talent. Let's talk about what's happening with gold as we see risk assets rally. Where does this leave the precious metal? Bloomberg opinion economist Marcus Ashworth says that gold is currently failing as a safe haven asset, instead acting as a piggy bank for nations facing economic strain. In fact, we've seen a number of central banks selling gold holdings. Let's put that question to him. He joins us now. Marcus, good to speak to you. So why do we see central banks selling gold?
Well, because they need to. The point is that it's reserve management are there for the rainy day, and this is it. Now, that could well be used in situations like Australia, for instance. Having cut their fuel levies. We've got serious problems in Turkey. We've got Turkey having to protect its currency, likewise with Russia. Polish have even been looking, before the conflict really, at selling some gold to pay for more defence. Quite clearly, the Middle East have got some issues whereby you could imagine they might need to spend an awful lot more in defence and moving some money around. At the end of the day, gold has done extremely well the last few years, and it's an easy thing to sell. And it would make something sense anyway, just a reserve management basis, which they often move allocations around on what things can be bond and equities and balances. So gold is not really looked at that.
Okay, but if these are holdings that central banks have, Marcus, then how does that help fiscal actors with the strains that you're right pointing?
Very good question there, yeah. The court, the independence of central banks, well, there's management of the country. So certain countries have different rules and regulations than others. But, as I said, countries as diverse as Poland, Russia, Turkey, and various other Middle Eastern countries can do different things. We see the Swiss doing different things that we might talk about with, for instance, something interesting to the Bank of England and the government. But I mean, likewise, the Bank of England does indeed help out a lot of the gilt markets. So, look, I'm not saying this is going to be for every country. I'm not going to say it needs to be for very much. And some countries will be buying gold on a dip because they still believe in diversifying away from perhaps over-reliance on maybe $6 assets. So it's just a two-way market, I think, whereas the last couple of years, it's been a one-way upward only speculative vehicle. I think gold has changed its nature.
Okay, so that's interesting. So there's a different kind of take to the markets these days. So if central banks and other authorities have been buying gold because they wanted to manage some of that risk that they saw with too much of their holdings being exposed to the dollar, does this tell us anything about de-dollarization, or is that a different story?
Well, it's a complex question, but I think you have to look at it in two ways. There's usage of dollars in day-to-day activity, which I think has actually increased, and we're seeing strength of dollar with people moving as a source of safe haven. Now, it hasn't been brilliant, but there have been not very many at all havens, including gold, in this recent crisis. So, and then what central banks or sovereign wealth funds use as their reserve management, which is to buy and hold and keep for the rainy day. Every now and again, that might have to be tapped into, like for some countries now. So usage and then what people would call sort of reserves management are two separate things. They're interrelated, don't get me wrong, but I think it's careful to conflate the situation with the dollar, which is, as the world's reserve currency, is perfectly sound in that context. And indeed, maybe as a reserve management tool, it's less attractive over time, and I think that hasn't gone away, and I'm sure gold will hold up perfectly well. As I said, some countries may use this opportunity to buy more. Other countries will use it as a chance to trim some profits and use it to do things that they may use to pay their currency, buy defense, or indeed help the economy with energy problems.
Why spend hours on complex video platforms? With the upgraded Canva video editor, we've made it easy to edit your soon-to-be viral. Just grab, drop, and adjust.
Marcus Ashworth with his take on what's happening with gold prices. Let us talk about technology and the way that it is growing. Since the Iran global economic outlook has been shaken and shaped by traditional industries, commodities, shipping, and physical exports. Now we've got a new McKinsey report published recently saying that the future global growth story will be written by 18 future arenas, as they call them, arenas of competition, including AI services and space. Here to talk us through the findings, Chris Bradley, director at the McKinsey Global Institute and McKinsey senior partner. Chris, nice to have you with us. Thank you very much for joining us early your time, I think, on this subject. I say this is about where technology is growing, because you've homed in on 18 future arenas of change, and you did this some time ago, and now you're giving us some further analysis. How much faster are these arenas growing, and give us a sense of which parts of the economy we're talking about?
Well, it's a fact we've discovered that in recent industrial history, the industries that count for about 10% of revenue actually make up half the value creation. So we've got this really interesting story where kind of a small number of industries really are shaping our industrial landscape. We call them arenas. They're places that have big end markets, new technology trajectories, and kind of this flavor of competition, which is more like a race. And in terms of growth, you know, if you took out the 18 next arenas in the last 3 years out of the large companies, then there would have almost been no growth in corporate revenue. So these 18 arenas are explaining almost all growth in corporate revenues and have explained half the growth in market cap. They're screaming ahead at an annual rate of 29% market cap growth versus kind of the normal industries at 8%. Quite an unbelievable story.
Okay, and so some of the areas we're talking about here, I mean, there's the obvious things like AI and cloud. You're also talking about EVs, video streaming, video gaming, obesity drugs, nuclear fission gets a mention, batteries, a whole host of different sectors, Chris. And you also say in your report that we are all in these arenas now, or maybe you mean increasingly so. I wonder what you're describing there.
Well, if you think about these arenas, and by the way, you're right, it does. AI foundations is a really big part of it, but and the continuing march of digitization, that's not finished yet. But also hard tech, and this is the digitalization of technology, electrification, and the entry technology in molecules and DNA as well. They're the kind of platforms we're talking about here. So they're the kind of platforms that we're talking about.
And when you say about physical technology, where do you see the growth coming from there? Is that about physical AI? Is it about robotics? Or is it about universal software? Where are the real growth areas when it comes to physical technology?
Well, it's things like robotics and semi-autonomous vehicles. For example, we noted in our report that in San Francisco, Waymo is already the second most popular form of transport behind an Uber. So we see these things really, they're not theoretical anymore. And when you say we're all in the arena now, what we really mean is over $1 in $4 of market cap in the world is now in these arenas, only 18 places. And while maybe, and that number, by the way, maybe 15 years ago, it was more like 5%. So these used to be things kind of on the fringe that you could think, hey, they're interesting technologies, but now they're so close to it. It's almost like they're stars that have come so close to it that they affect the gravity field that all of us are in. And we're either in an arena, we're next to an arena, we're entering, now affecting everything.
Maybe we're more likely to be in one of these arenas if we and live, Chris, in the US or in China. You say that 90% of the market value of these 18 arenas is in those two countries. Where does that leave the rest of the world?
Well, this is a really interesting question for Europe, isn't it? I mean, in the States, these arenas are about 37% of the market cap, so a really big chunk of the stock market. But in Europe, that number's only 7%. And what it really reflects, Anna, is capital allocation. In the US, these 18 industries account for more than 1/3 of capex and R&D, but in Europe, much less than 1/10. And you know, in fact, the surge of investment that's happening in the US is because of these arenas, and it's not happening in Europe.
And you talk about, and we talk in that investment context a lot about hyperscalers, Chris. You in your report talk about omniscalers. Help me understand what these are, what they bring.
Well, we wouldn't be McKinsey without creating a new slogan, would we, around omniscalers? And these are 9 companies that not only are among the world's biggest investors, so they spend 20 billion plus a year on capex and R&D, but they also play in 3 or more of these 18 arenas. And it's a surprising new development in the way competition works. So who would have thought maybe 5 years ago that a social media company, a space company, an EV company, an AI company would actually have synergies together and have an industrial logic. But that's the world we're in. And these omniscalers, they really matter. Let me just give you a sense of scale here. They generate $640 billion of operating cash flow last year. To give you a sense, that's like